But the point is this. As the market was dropping down, this was Monday's, where's it at here? There we go. Monday, August 26th, 2024, it's daily low. And below that low is sell side. That means there's sell orders. So if we look at it like this, here is Monday, right here. That's the low. How can you trust that it isn't going to reverse? Like you're trading inside this area here. Like what are you feeling while you're looking at the price lights? Like when you see that, what are you trusting? What are you leaning on? What's the logic that tells you this is going to keep dropping, ICT? Well, number one, it's trying to get down to the previous day's low where there's real orders resting below that. What kind of orders? Sell stops. Okay. So if I know that we're pretty uniform in the way we keep dropping, my eye goes to what I teach you. This candlestick right here is an order block. It's an up close candle. If I find that, and then every subsequent candle after that, to the right as it's forming, as we move away from it, if it comes back up into this candlestick, is it able to overtake half of this candlestick? In other words, think about it like this. I'm teaching you order flow. This is real order flow. It has absolutely no requirements for level 2 data. People say, oh, show me your level 2 data. Fuck you and your gimmicks. That stuff doesn't work. you have faith in stuff that's literally nonsense. You don't need all that stuff. But it seems technical. You feel like you're a scientific trader when all that stuff's on your chart. And it's just cluttered. And it's a myth. So here is half of that order block. Okay. Did this candlestick or this candlestick come up and touch that halfway point, or which would be mean threshold? No. That's exactly what I want to see on our order block. Okay, the market trades lower. This candlestick trades up into this candlestick. So what does that make this? Propulsion block. So price should do what? It should trade away from that. Now, in this little area right here, we have a volume imbalance. That's what this order block delivers to. This candlestick, and this candlestick is working inside of this inefficiency where we had the body here. This candle's indecisive. It's just basically the open and close is the same price, and we have a high and a low. That's indecisive. Usually when you see an indecisive candle like that, you're building a volume imbalance. And the next candle, you'll see it's there. Boom. Find that in Steve Nielsen's book. But the rally back up just fills in that little void there. It's no bodies. It's absent of having any bodies. So the market will do patchwork. That's the technical term for it, by the way. I wasn't supposed to say that, but fuck it, it's a live stream. The algorithm is doing patchwork where it fills in these inefficiencies. Okay, so when it does that, then the market displaces and goes lower. At this moment, we can now see it goes back up, trades one more time. What is it digging into? The original order block. That is a reclaimed bearish order block. Why? Because we've already moved away from it and it's coming right back up into it here. It needs to show immediate response, drop lower. Does it? Yes, it does. And then we retrace back into this little area here, fair value gap, trades back up into it, hits it. Does that send price lower? Yes. Price displaces lower, takes out this low, trades up into this area here, matches the high here. Does it have any willingness to get up in this inefficiency? No. And then breaks lower right there. What I have right there is a market indicating in every shape, facet, or form that it's heavy. It means it's really, really heavy and it's going to be easy for it to fall. So what is it reaching for? Well, what are we close to? First order of business. Where are we opening up? Whenever you're sitting down into the trade, whether you're trading in the afternoon, whether you're trading in the morning, stop for a second. Let's just stop for a second. I got to take a second. What I'm teaching to you right now, okay, is so good. I really expect some kind of feedback today because this is some shit that this is worth way more money than I ever charged. And I really want you to think about it. When you're done with this lesson today, think about what you were introduced to and how you were taught. I taught you stop placement, how to manage a stop placement, how to read order flow, how to read price action, how to trust when the trade's going to keep going, how not to be afraid, how to enter these trades. I executed with these trades. I showed you it. I proved it to you. And I'm giving you all the details that I always keep to myself. But I'm always leaning to my sons and saying, this is what I'm doing. When they're sitting next to me, I'm telling them all these things as I'm talking out loud to them. It may not happen at the moment. Like I have to go back as it starts moving in my favor. And I'll say, the reason why I did that is I'm doing all this stuff here. But the heaviness in price is proven right here. So I'm confident that when we traded up into this area here, I'm not going to see the upper half of this close in. Upper half of this, watch. See that? Now, what have I been teaching in the 2024 mentorship? PV arrays, the highest form, the highest order of order flow around them is when you're bearish, the upper half are not traded to. When they're bullish, the lower half are not traded to. That's the signature. That's the thing that you were never going to learn from me. That's one of the things, let's put it that way. But I was not going to teach that to paid mentorship students. They didn't need it. If they just used the lowest entry model, the bottom of the up candle, the low, just use that. When I felt a little bit more generous, I'd say, okay, go to the opening price. But these things were never supposed to be given to you. You have Caleb to thank for this. So when he gets out there and he starts jawboning, give him all that thank you and all that stuff, okay? Because it's him. That's why you're learning it. But the upper half here never trades to it there. So I'm getting short on this candlestick as it's already proven here, here, and here, and I need to be in. I need to be in on the move. So that's here. I don't trust that, I trust rather. I do trust that we're not going in the upper half of this range here. So this is what I'm visually seeing as a barrier. It's not going to go, come on, get your eyes fixed here. Okay. It's not going to go up into this portion here. That's my belief. Why? Because everything all through here is indicating that it's heavy. We're real heavy. We couldn't even do institutional order flow entry drill here, and we had this big drop down. Now, when you're watching this might feel like, oh, well, it's been dropping. It's got to turn around. It's got to turn around. It keeps dropping. That's not what I'm thinking. Why? Why am I not thinking that? Because this is the previous day's low. It's indicating every way it can that is in a hurry to go down below the previous day's low. The previous day's low is like a honeypot. It literally is like a honeypot. It's always there every single day, previous day's high and previous day's low. If we open in the lower half of the previous day's range, whenever you're sitting down in front of your charts, whenever your operating hours are, and it opens up your time to trade, if you're in the lower half of the previous day's range, you should always look for some kind of return back to the previous day's low. That's simple market 101. Like it's a normal thing for that to happen. But when you try to learn, or if you learn from other people that don't have to trade, they don't know that. And they're looking for all these complicated indicator settings and all this confluence of all this dumb shit that's supposed to be overlaid on your chart that is a distraction. The only time I'm laying things over top of the chart is I want your eye to go to what it means to me when I'm watching price action. I am not wanting it to trade up here. Once it does all these things in here, I want to be in on the trade because I know it's getting ready to take off. The very next candle, what does it do? It opens and off to the races we go. And then we create what? Another opportunity for it to create a volume imbalance in here. So I'm expecting price to, it opens, it trades back up into this candlestick's range. So this big down close candle, it's not that big in terms of range, but in reference to, in relationship to all the previous candles' ranges size, it's a large candle. When this candle opens up here, I'm watching to see it dig back up into this candle. I am trusting that it's not going to go back into the upper half. So I just want to get in any portion of this lower part of this candlestick. Watch my fill. See it? Here's the low of that candle right there. It opens and it's digging into this portion of the range. I want to add to it. There you go. Selling more. And then I get another opportunity here. What's it digging into? The volume imbalance. I want to be filled there. As the candle's going up, I'm filled it right there, bang. And then what does the market do? Rolls over, energetically runs right below some random level, the previous day's low. And there it is. That's my fill. Look closely, folks. Look real close. This is the stuff I love. I love twisting the knife in the guts of the trolls. See that fill? That's one tick from the low. That's one tick, baby. You're talking to me like I don't know what I'm talking about in the comment section. But I'm proving to you that I am the #1 day trader on the fucking planet. So anticipating this large range is down, incoming in the recording, is because we were approaching Monday's low, and it's going to dig aggressively and fast to get down there and get those orders. Because as it's going closer to that previous day's low, anyone that has their stop down there has the ability to do what? Quickly say, I'm getting out and I'm going to protect myself and remove the order. Think about it. You would probably do that same thing. You've probably done it many times. The few times you actually use a real stop loss, you start thinking, oh no, I gotta get out of here. Let me take the stop off. But anyone that's short, they need those orders to be there to get out. So the first run into them is always going to be fast and sudden. Boom, sudden, real quick. Because they don't want to let them pull the order. And that's the signature that when I am saying I'm expecting speed, I want to see distance and speed, or I want to see the magnitude of the move to increase right here. I'm indicating that I'm expecting the pool of liquidity that's next in order of business going lower or higher. They're going to quickly run for that because they are not going to let them pull those orders. So as the algorithm delivers lower, 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 when it gets in a proximity of this low, it will naturally speed up. What does that mean? It does not matter how many people are coming in to buy it. And it doesn't matter how many people are selling short. That's why when you're watching price, it's here, then it's here, and you think it's took a long time for that 1 minute candle to do all that. It's gapping down. It's very speedily dropping, and it keeps offering lower prices, and it gaps lower and lower and lower and lower. And inside these individual candles, look at them, study them. If you have access to do like a 1 second chart, 5 second chart, you'll see it's porous price action. It's not a smooth one single candlestick of movement going lower. It's jumping and skipping down there because it needs to get quickly down below that previous day's low. That's a mechanism that's coded inside of the algorithm, which cancels out all the tomfoolery bullshit that people say from myopic perspectives with their head up their ass and listen to people that don't know what the fuck they're talking about when they say it's buying and selling pressure. That's moving price. That is absolutely not it because it's spooling here. It's jumping and skipping real, real fast to get down to those orders. It doesn't need but one contract to book that price. One contract. That's all it's doing. It's going down here no matter how many people are buying and selling it. And the sooner you realize that, the easier this becomes. But you're arm wrestling me. You're arm wrestling me, think you're going to beat me into submission to your idea. Bullshit. It's never happening. You're not trading like me. You can't see these things before I can. You can't execute them like I can. But I'm going to believe your dumb shit. That I left that school of thought. I left that 30 years ago. Well, not technically 30 years ago. About 26 years ago. Think. If it's logic, that's sound, and it repeats, then you should be able to go in the charts and see it repeating. What is it doing over here? And once I say this, I'm done. I know I say that a lot, but I'm starving. I have hunger cramps right now. We have a low, a lower low, and digs in one more time. Right in here. So it's absorbed all of the liquidity below Monday's low. And then it rallies up. Liquidity. Easily digs into it. Into here. Easily above the relative equal highs. Then back down. When you start studying the price action like that, who's at the most vulnerable position right now? Who's making money? What are they targeting? And how can they upset them? And why would they, being upset, be profitable to some other entity out there? Okay. Well, going below Monday's low, buying up all the sell side with the expectation that you're going to run the highs over here. I don't even know I have this on here. Get that off. This is obvious, right? I mean, this is so obvious, and that's what you need to be panning through your charts, Caleb. When you start seeing these things like this, these are the easy, low-hanging fruit objectives. They just cannot hide them from you. They are the setups that are just like 1 or 2 or 3 a week. They're the easy ones. You want to start looking for them. And then as you get better, you'll be able to work with smaller ranges, and the things that you use when you're trading these bigger ones, you're just going to use it because it's fractal. You're going to use these on the smaller price runs. And you'll have sheer precision that evades everybody else. Everybody